Today we're going to talk about the top 4 criticisms against infinite banking. So let's just start out right off the bat. So number 1, let's break this down. They say that there's a high cost of insurance policies, but let's look at this. So I've got a friend that owns a dental office, and he was working for a dentist, and he loved it. But then he decided he wanted to own his own place. And so he took out a massive loan and went and started his own place. You know what? The first year he didn't make much money because he had a huge loan. Still made money, but he had a huge loan. The cost of ownership can be really, really high, it can be really, really low. But there's a cost to ownership. So what we're doing in infinite banking is we are making ourselves our own bank. This dentist spent that money because he wanted to be an owner. Okay, there was a cost to owning the dental practice. There's a cost to banking. So you can save up $20 million, wait 10 years to get a charter and start a bank. Or you can start your own bank using a properly structured whole life insurance policy. And you can have your own bank that way. In that situation, you're gonna have a bank that makes money every week, every month, every year, and you're gonna recapture all that interest that you were paying to whoever when you pay those interests. So is there a cost to infinite banking? Yes, there's a cost, but there's a cost to everything we do. There's a cost to ownership. And if I want to be an owner, that's one of the first things I've got to do. Okay. The next thing, number 2, there's a slow cash value accumulation. Building significant cash value in a whole life policy is a slow process, often taking a decade or more. The slow growth means that policyholders may not have substantial cash value available. So this is where the whole thing, you hear me saying, properly structured whole life insurance. So I want to end this, understand that an IBC policy, an infinite banking policy, is not for life insurance. Life insurance is a tertiary benefit of having an IBC policy. The whole purpose in an infinite banking policy is for cash accumulation and warehousing this cash. All money has a place it has to reside. Why not have it reside in a place that's going to grow interest, that's going to have uninterrupted compounding, okay? So here's where this is not necessarily true. The reason it's not necessarily true, so when we properly structure these things, we want to structure them to where there's a low death benefit and a lot of cash accumulation. So when I put that cash in there, I've got a large portion, just even in year 1, that I can access to that cash, okay? And then every year after that, when I put money in there, I've got access to that cash because of the way that we structure these things. Now, here's the thing you have to understand. This is a savings tool. And just like the cash that you put in a savings account, it will accumulate as we go. But if I were to put money in a savings account at a bank, and I say I get 2 or 3% a year, the thing with that is I gain 2 or 3%, but I've also got to pay taxes on that. When I gain interest in an IBC account, I don't have to pay taxes on that. It happens over time, just like anything good. It's going to take time. But the beauty of this is it grows honestly like a retirement account, slow and steady, but you can use the cash. So if I want to have a policy and I have $50,000 in the policy, even if I have it in year 1, I can pull that cash out. It's still going to grow, and I can go use that cash to make more money. I can't do that in a retirement account. So this is where it kind of checks all the boxes as like the ultimate savings tool. And I do accumulate cash over time, but I'm not accumulating it, right now in the account.